All right, so let's dive into something a little bit crazy, shall we?
Yeah.
Imagine waking up to headlines, blaring, Trump wins again.
Crazy.
I know, right? And that's the world we're exploring in this deep dive today. And you guys have sent over a ton of articles about how the markets are reacting.
Yeah.
And let's just say things got interesting pretty darn quickly.
It has been a wild ride for sure.
Right.
So we're not here to, debate politics or anything like that.
Right.
We're here to really unpack the economic side of things and what this really unexpected win means for the markets and ultimately for your wallet.
Okay, so first up, a lot of these articles are highlighting this huge, almost immediate shift in the markets.
Right.
We saw U.S. stock futures just soar, the dollar is surging.
Like it's 2022 again.
Like it's 2022 all over again, and even Bitcoin is hitting new highs.
Oh, wow.
So what's driving this sudden surge?
Well, it seems like the markets are reacting to what they see as a return to familiar territory.
Okay.
Investors are anticipating policies like tariffs, tax cuts, and deregulation. Essentially, a repeat of Trump's previous term. And certain sectors stand to benefit significantly from these policies.
Makes sense, but the articles also point out that not everybody is, popping champagne.
Right.
Who are the potential losers in this scenario?
Well, those most vulnerable to trade wars are feeling the heat already.
Okay.
The Mexican peso, for instance, took a tumble, and the euro is down.
Okay.
And there's a lot of concern that global trade could slow down considerably.
So a mixed bag of reactions for sure.
Definitely.
Some are betting on a Trump bump, others are bracing for impact.
Yeah.
Speaking of impact, the articles also mentioned this possibility of rising interest rates. What's the connection there?
Yeah, it's all about managing the potential ripple effects of those anticipated policies.
Yep.
Higher tariffs could lead to more expensive imports,
Right.
which could then fuel inflation.
Okay.
And then there are the potential government spending plans under a new Trump administration,
Right.
which could add pressure to the budget. All of this together is creating an expectation that interest rates will likely climb.
Okay, that makes sense. Higher prices, potentially bigger budget deficit.
Yeah.
Sounds like a classic recipe for interest rate hikes.
Pretty much.
But can you give me some specific examples from these articles?
Absolutely. Take Tesla, for example.
Okay.
Elon Musk has publicly supported Trump,
Right.
and Tesla's stock value shot up nearly 13% after the election results came in.
Wow.
Then there's the Trump Media and Technology Group. Their shares are also surging.
Interesting.
These examples highlight how investors are already trying to predict which companies will thrive in this new political landscape.
It's fascinating how these market shifts reflect the perceived winners and losers so quickly. But one thing that really struck me was how much faster the markets reacted this time compared to Biden's win back in 2020.
That's a really astute observation.
Right.
And one of the key takeaways from the articles is that markets absolutely hate uncertainty.
Yeah.
And this time around, the election results were very clear and decisive, which fueled those swift reactions. There was no drawn-out vote count, no hanging chads. So investors had a much clearer picture of what to expect.
So less uncertainty leads to faster, more decisive market movements.
Yeah.
That makes sense. But while we've talked about these overall trends,
Right.
how about some specific examples of companies or sectors that might be negatively impacted?
Okay.
You mentioned the Mexican peso being down, which makes me think of
Yeah, you're right. Companies that heavily rely on trade with Mexico, like certain automotive manufacturers or agricultural businesses, are likely seeing some dips in their stock prices. They're more vulnerable to those potential trade tensions we talked about earlier.
And on the flip side, are there any sectors besides those already mentioned that might benefit from this shift in leadership? I know the articles didn't go into too much detail beyond Tesla and defense, but I'm curious if there are any other potential winners kind of lurking in the shadows.
That's a great question, and it's something we can definitely explore further. One area worth considering is the pharmaceutical industry.
Okay.
Trump's previous administration pursued policies aimed at lowering drug prices,
Right.
which could signal potential benefits for certain companies in this sector.
Okay.
But of course, it's still early days, and we'll need to see how these policies actually play out.
Right. It's all speculation at this point, but that's what makes this so interesting. It's like trying to solve a giant economic puzzle.
Totally.
And speaking of puzzles, let's unpack this idea of rising interest rates a bit further.
Okay.
What are the specific mechanics at play here?
Sure. One of the main factors driving interest rates is inflation,
Right.
as we mentioned earlier. Essentially, when prices go up, The central bank often raises interest rates to try to cool down the economy.
So it's like a counterbalance.
Yeah.
Higher interest rates make it more expensive to borrow money, which slows down spending.
Right.
And in theory, that helps to control those rising prices.
Exactly. And now let's consider Trump's proposed tariffs on imports. If those are implemented, it's likely that we'll see higher prices for consumers,
Right.
which in turn could contribute to inflation.
Right. So tariffs are one potential driver of higher interest rates.
Yeah.
But what about the potential increase in government spending? How does that factor into the equation?
Well, if the government spends more without increasing taxes to offset those expenses,
Yeah.
it can lead to a larger budget deficit.
Okay.
And this deficit can also contribute to inflation.
Okay.
It's like the government is injecting more money into the economy, which can ultimately drive up prices.
So both tariffs and increased government spending could potentially lead to higher inflation.
Yep.
Which then forces the Federal Reserve to raise interest rates.
That's right.
It's like a chain reaction.
It is.
With far-reaching consequences.
Precisely. And those consequences will affect businesses and individuals in different ways.
Yeah.
For example, if you're thinking about buying a house or refinancing your mortgage, these potential interest rate hikes could significantly impact your decisions.
Yeah. And let's not forget about businesses.
Right.
Increased borrowing costs could make it more difficult for them to invest and expand.
Absolutely.
Which could have ripple effects throughout the entire economy.
This is why understanding the potential impact of these economic shifts is so crucial for everyone, from individual consumers to large corporations.
So lots to unpack here.
For sure.
But before we get too far ahead of ourselves, let's take a step back and consider the bigger picture.
Okay.
What are the broader implications of these market reactions for the global economy?
That's the million-dollar question, isn't it?
It is.
And the answer is complex.
Yeah.
One of the most immediate impacts is likely to be increased volatility in global markets.
Okay.
Investors are still trying to assess the full implications of a Trump presidency.
Right.
And this uncertainty can lead to significant fluctuations in stock prices, exchange rates, and commodity prices.
Right. And then there's the potential for those trade wars we discussed earlier.
Right.
If Trump follows through on his protectionist policies,
Right.
it could spark retaliatory measures from other countries,
Right.
which could further disrupt global trade and potentially even lead to economic slowdowns.
Exactly. And all of this is happening against the backdrop of existing global challenges, such as supply chain disruptions, geopolitical tensions, and rising energy prices.
Right.
So the potential for these market reactions to exacerbate these existing issues is definitely a cause for concern.
It seems like we're entering a period of significant economic uncertainty.
Yeah.
But amidst all this uncertainty, are there any potential bright spots or opportunities that we should be paying attention to?
That's an excellent question.
Yeah.
While there are certainly risks and challenges ahead, there are also opportunities for those who are well prepared and adaptable.
Okay.
For example, companies that can navigate the complexities of global trade and adapt their supply chains to mitigate disruptions could find themselves in a stronger position.
And what about individual investors? Are there any specific sectors or strategies that they should be considering in this environment?
Well, it's important to remember that investing always involves risk, and there are no guarantees.
Of course.
However, sectors like infrastructure, cybersecurity, and healthcare are often seen as more resilient during periods of economic uncertainty.
Okay.
Additionally, investors may want to consider diversifying their portfolios across different asset classes to mitigate risk.
It sounds like navigating this new economic landscape will require careful planning and a keen eye for both risks and opportunities.
I think that's a great way to put it.
But before we wrap up this part of our deep dive,
Yeah.
are there any final thoughts you'd like to share with our listeners?
I think the most important takeaway is that we're in uncharted territory.
Yeah.
No one can predict with certainty how these events will unfold.
Right.
However, by staying informed, understanding the key economic drivers at play, and remaining adaptable, we can all navigate this period of transition more effectively.
Well said. And with that, we'll take a pause here.
Okay.
When we come back in part 2, we'll explore some of the specific industries and companies that are likely to be most impacted by Trump's return to the White House.
Sounds good.
Stay tuned.
All right.
Welcome back to our deep dive into the market's reaction to Trump's unexpected victory.
Yeah.
We've laid out the groundwork, the soaring stocks,
Right.
the potential trade wars, the looming interest rate hikes.
Yeah.
Now let's get even more specific.
Okay.
Which industries are poised for, like, the biggest shakeups?
Well, let's start with one that's already seeing a lot of movement energy.
Okay.
The articles you sent highlighted a dip in renewable energy stocks right after the election.
It seems counterintuitive at first, right?
Yeah.
You'd think with growing concerns about climate change, renewables would be a safe bet regardless of who's in office?
Right. But that's where understanding the political landscape comes in.
Okay.
Trump has been a vocal advocate for traditional fossil fuels, coal, oil, natural gas. Investors are anticipating a shift back in that direction,
Okay.
potentially at the expense of renewables like solar and wind.
So it's less about those companies themselves performing poorly
Right.
and more about a perceived shift in government priorities and investment?
Exactly. It's all about reading the tea leaves and anticipating where future government support and incentives might land.
Okay, so fossil fuels potentially back in the spotlight.
Yeah.
Are there any other industries that might benefit from a Trump presidency based on the articles you've analyzed?
Defense is a sector that often sees gains under Republican administrations.
Okay.
And this time is no different. The articles point out that defense stocks rallied immediately following the election results.
I'm guessing that's tied to Trump's previous stance on military spending, which
Yeah.
was, shall we say, robust.
You could say that investors are anticipating increased military spending and government contracts in the defense sector based on Trump's stated priorities and foreign policy goals.
Interesting. It seems like every political shift creates winners and losers in the market.
Definitely.
Speaking of potential losers, you mentioned earlier that companies reliant on trade with Mexico might be taking a hit.
Right.
Can we dive a bit deeper into that?
Absolutely. Let's say you're an automotive manufacturer that sources a lot of parts from Mexico.
Okay.
Those tariffs Trump has talked about could make those parts significantly more expensive,
Yeah.
cutting into your profits.
And that increased cost could be passed on to consumers,
Right.
further fueling the inflation cycle we talked about earlier.
Yeah,
Like
that's
a domino effect.
Exactly, and that's just one example. Agriculture is another industry where those tariffs could have a major impact.
Okay.
Think about the produce you buy at the grocery store. If a significant portion of that comes from Mexico,
Yeah.
those prices could rise, impacting both consumers and the businesses that rely on those imports.
Okay, so we've got energy, defense, and industries reliant on trade all potentially seeing major shifts.
Hmm.
But what about the bigger picture?
Okay.
What overarching themes or trends emerge from these articles?
One key theme is the interconnectedness of the global economy.
Okay.
We're seeing how a political shift in one country can send ripples throughout the world.
Right. It's a reminder that we're not operating in isolation.
Yeah.
These decisions have far-reaching consequences.
Precisely. And another theme that keeps popping up is the uncertainty surrounding how these policies will actually play out.
Right.
The articles are full of speculation, expert opinions, and a healthy dose of wait and see.
Yeah, it makes sense. We're essentially trying to predict the future,
Right.
which is always a risky business.
It is.
But that's what makes this whole deep dive so fascinating, right?
Mm-hmm.
We're trying to make sense of these complex forces and understand how they might impact our lives.
Absolutely. And one of the most crucial aspects to understand is how these policy shifts could influence interest rates, a topic we touched upon earlier.
Right. We talk about how tariffs and increased government spending could contribute to inflation, which could then lead to interest rate hikes, but let's zoom in on that a bit further. How might these potential interest rate changes impact individuals and businesses in practical terms?
Let's start with individuals. Imagine you're a homeowner considering refinancing your mortgage.
Okay.
If interest rates rise, as many experts predict, you might be better off refinancing sooner rather than later to lock in a lower rate.
But on the flip side, if you're thinking about buying a house, maybe waiting to see how things play out is the smarter move.
That's definitely a strategy worth considering. However, keep in mind that the housing market is influenced by many factors.
Right.
And trying to time the market perfectly is incredibly difficult.
Yeah, it's all about weighing those potential risks and rewards.
Precisely. And it's not just about mortgages.
Okay.
Think about auto loans, credit card debt, student loans.
Yeah.
Any kind of borrowing becomes more expensive as interest rates rise.
So a potential ripple effect across the entire consumer credit landscape.
Right.
And what about businesses?
Yeah.
How might they be impacted by rising interest rates?
For businesses, higher interest rates mean higher borrowing costs. This could make it more expensive to invest in new equipment, expand operations, or even just manage day-to-day expenses.
And that in turn could slow down economic growth, right?
Exactly. It's a complex interplay of factors, and it's hard to predict the exact outcome.
Yeah.
But What we can say with certainty is that interest rates are a key lever that the Federal Reserve uses to influence the economy,
Okay.
and any significant changes will have widespread impacts.
So we've got potential winners and losers emerging, a complex web of global interconnections, and the looming specter of rising interest rates.
Uh-huh.
Where do we go from here?
Right.
What are some key takeaways for our listeners as they try to navigate this uncertain terrain?
One of the most important things is to stay informed.
Okay.
Pay attention to the news, follow financial reports,
Right.
and don't be afraid to seek out expert opinions.
Right. Knowledge is power, especially in times like these.
Absolutely. And another crucial piece of advice is to stay calm.
Okay.
Markets go up, markets go down. It's the nature of the beast.
Yeah.
The key is to have a sound investment strategy and stick to it.
Don't panic, stay informed, and stick to your plan's solid advice.
I try.
But amidst all this talk of economics and market trends,
Yeah,
it's easy to lose sight of the human element.
right.
How might these changes impact the everyday lives of ordinary people?
That's a crucial question.
Hmm.
We've talked about potential price increases for consumer goods, the impact on borrowing costs, and the ripple effects on various industries.
Right.
But ultimately, these economic shifts translate into real-world consequences for individuals and families.
Right. It's not just about numbers on a screen.
Yeah.
It's about people's livelihoods, their ability to afford basic necessities, and their overall financial well-being.
Exactly. And this is where having a clear understanding of the potential impacts can empower individuals to make informed decisions about their personal finances,
Okay.
whether it's adjusting their budgets, exploring different investment options, or simply being more mindful of their spending habits. Knowledge can help individuals navigate these uncertain times more effectively.
So it's about taking control of your financial future,
Yeah.
even amidst the unpredictable nature of the markets. But before we delve further into those personal finance strategies,
Right.
let's shift gears and explore another fascinating aspect of this story:
Okay.
the speed and magnitude of the market's reaction.
That's a great point.
Mm.
One of the things that really stood out from the articles is how quickly and dramatically the markets adjusted to the news of Trump's victory. It's a reminder that in today's interconnected world, information travels at lightning speed,
Yeah.
and the financial markets are constantly adapting.
It's like the entire world took a collective gasp, and then the gears of the global economy started turning in a new direction.
Yeah.
But what factors contributed to this swift and decisive reaction? Was it simply the unexpected nature of the outcome, or were there other forces at play?
I think it was a combination of factors. First, as we discussed earlier, markets hate uncertainty.
Right.
And this selection, despite being one of the most closely watched and hotly debated in history, produced a relatively clear and decisive outcome.
Uh-huh.
The results were known quickly, and there was no prolonged period of uncertainty or legal challenges.
Right.
This allowed investors to react swiftly and with a greater degree of confidence.
So the absence of those hanging chads from 2000 made a big difference.
It certainly seems that way, but there's more to it than just the speed of the results.
Yeah.
I think the markets are also reacting to the perceived clarity of Trump's policy agenda, love him or hate him.
Uh-huh.
There's no denying that Trump is a known quantity.
Right.
His policies, while often controversial, are generally predictable.
So investors are feeling more confident because they have a better sense of what to expect,
Right.
even if they don't necessarily agree with those policies.
Exactly. And that predictability, even if it's based on policies that some might view as unfavorable, can be a powerful driver of market confidence.
Okay.
It allows investors to assess risks and opportunities more effectively and make more informed decisions.
It's fascinating how the markets, in a way, are reflecting a collective sense of relief, even if it's tinged with apprehension. But as we delve deeper into the specifics of those policies, let's not lose sight of the potential for unexpected twists and turns.
Absolutely. The political landscape is constantly evolving,
Yeah.
and unforeseen events can quickly upend even the most carefully laid plans.
Right. We're operating in a world where a single tweet can send shockwaves through the markets.
Totally.
So while we can analyze trends and make predictions,
Mhm.
it's crucial to remain adaptable and open to the possibility of the unexpected.
Well said. And that adaptability is especially important when we consider the potential for trade wars, a topic that has generated a lot of anxiety and debate.
Right. We've touched on the potential impact of tariffs on specific industries, but let's zoom out and consider the broader implications for the global economy.
Okay.
What are the key concerns surrounding these potential trade conflicts, and how might they play out in the months and years ahead?
One of the biggest concerns is that trade wars can quickly escalate, leading to a downward spiral of retaliatory tariffs and protectionist measures. This can disrupt global supply chains, raise prices for consumers, and ultimately harm economic growth.
It's like a game of economic chicken, where everyone loses if no one backs down.
That's a good analogy, and the stakes are incredibly high. We're already seeing signs of rising tensions between the U.S. and its major trading partners.
Right.
And if these tensions aren't managed carefully, they could have a significant impact on the global economy.
So it's a situation that requires careful diplomacy
Right.
and a delicate balancing act. But let's not forget that trade wars, while often portrayed as negative, can also create opportunities.
That's an important point. While trade wars can undoubtedly disrupt existing trade patterns and create uncertainty, they can also force countries to reevaluate their trade relationships and potentially diversify their economies.
So it's not necessarily a black and white issue.
Right.
There are potential downsides, but also opportunities for growth and innovation.
Exactly. And I think that's one of the key takeaways from our deep dive so far, that the economic landscape is complex and multifaceted, and every action has the potential to create both positive and negative consequences.
It's a reminder that there are rarely simple answers in the world of economics. But before we get too lost in the complexities of trade wars, let's shift gears and explore another crucial aspect of this story.
Okay.
The potential impact on specific sectors and companies.
That's a great segue. We've talked about broad trends and potential winners and losers.
Right.
But let's get more granular. Which specific companies are likely to be most affected by these policy shifts, and how might they adapt to the changing landscape?
That's a question that's on the minds of a lot of investors and business leaders. And it's one that we'll explore in depth in the next part of our deep dive.
Welcome back to the deep dive. We've covered a lot of ground, from market trends to the potential impact of tariffs and trade wars. Now let's get down to brass tacks.
Okay.
How are these shifts affecting specific companies?
Let's start with an industry we haven't discussed in detail yet, pharmaceuticals. Okay.
The articles you sent suggest this sector could be in for an interesting ride.
Yeah, the articles mention Trump's previous efforts to lower drug prices.
Right.
Which is a pretty big deal considering how expensive medications are in the U.S.
Exactly. If Trump pushes for similar policies this time around, it could create both challenges and opportunities for pharmaceutical companies.
Okay.
Some might see their profits squeezed if forced to lower prices.
Right.
While others might thrive if they can adapt to a more price-sensitive market.
So it's not a clear-cut win or loss for the entire industry. It'll depend on how individual companies navigate those policy changes.
Precisely. It's a reminder that even within a single sector, there can be winners and losers, depending on how companies adapt to the evolving landscape.
Okay, pharmaceuticals check. What about another sector, maybe one that's more directly tied to those trade tensions we keep talking about?
Let's look at manufacturing, specifically automotive manufacturing.
Okay.
As we discussed earlier, companies that rely heavily on parts from Mexico could be facing some tough choices.
Right, because those tariffs could make imported parts significantly more expensive.
Yeah.
What options do those companies have?
Well, they could try to absorb those increased costs, but that would likely eat into their profits. Another option is to raise prices, but that could make them less competitive. Or they could explore shifting their supply chains, perhaps sourcing parts from different countries, or even bringing some manufacturing back to the U.S.
So it's a complex equation with no easy answers.
Right.
You'll have to weigh the costs and benefits of each approach.
Exactly. And those decisions will have ripple effects throughout the entire automotive industry, impacting suppliers, dealerships, and ultimately consumers.
Yeah, it's a reminder that these economic shifts don't happen in a vacuum.
Right. Yeah.
They touch every corner of the market, from giant corporations down to the average person buying a car.
Absolutely. And that brings us to another crucial point, the impact on the average person.
Yeah.
We've talked about potential price increases, job losses, and a host of other economic uncertainties. What advice do the articles offer for navigating this new reality?
One recurring theme is the importance of financial literacy.
Okay.
The more you understand about how the economy works, the better equipped you'll be to make smart decisions.
Exactly. It's about taking control of your personal finances. This could mean revisiting your budget, diversifying your investments, or even exploring new career paths that might be more resilient to economic downturns.
So it's not just about riding out the storm.
Right.
It's about using this as an opportunity to learn, adapt, and potentially even come out stronger on the other side.
Precisely. And that's where those nuggets of wisdom from the articles come in handy.
Okay.
They offer practical advice from managing debt to understanding the nuances of investing in a volatile market.
It's like having a roadmap for navigating uncertain terrain.
Yeah.
And speaking of maps, let's zoom out for a moment and consider the global implications of all this. We've talked about trade wars and the interconnectedness of the global economy. But what's the overall outlook?
The articles paint a mixed picture.
Okay.
Some experts predict a period of significant volatility and potential economic slowdowns, while others see opportunities for growth and innovation amidst the disruption.
So no one has a crystal ball.
Nope.
But it's clear that we're in for an interesting ride. Any final thoughts for our listeners as they try to make sense of this complex landscape?
I'd say stay informed, stay engaged,
Uh-huh.
and most importantly, stay curious.
Okay.
The more you understand about the forces shaping the world around you,
Yeah.
the better equipped you'll be to navigate whatever challenges and opportunities lie ahead.
Well said. And on that note, we'll wrap up our deep dive into the market's reaction to Trump's return. We've explored the winners and losers, the potential pitfalls, and the glimmers of hope. Now it's up to you to decide how this information shapes your understanding of the world and your place in it. Thanks for joining us on this journey, and until next time, happy navigating.